This is the Scrap Metal Commodities Recycling Report by BENLEE Roll-Off Lugger and Open-Top Trailers and Raleigh Goldsboro Metal Recycling, Monday, September 12, 2016. In this report, last week commodity prices were mixed, and economic reports showed continued slow economic growth. U.S. steel production rose for the week after a few months of falling, as imports of finished steel, especially rebar, has hurt U.S. steel mills. Oil prices rose 3% for the week, ending at about $46 a barrel, up 10% for the month, yet actually about flat for the past 12 months. Oil rigs, which use enormous amounts of steel, continued their slow rise in recent months. They have been up for 10 of the last 11 weeks, which is a positive trend that will help the steel industry and help stabilize falling steel prices. Iron ore fell 3% for the week, ending Thursday at $58 a metric ton. While up about 60% from a number of months ago, it is down about 2% for the year due to higher production and somewhat higher iron ore demand. This chart shows flat scrap ferrous pricing, which does not reflect cut grades dropped a much higher than expected $20 gross ton last week, which is 89 cents per 100 pounds and $178 per net ton. Limited U.S. scrap exports and lower U.S. demand were key drivers for this big fall. Hot rolled coil steel prices remain under pressure as there remains some weakness in U.S. demand, so we see prices off their recent highs. Related, last week ended with Nucor and SDI both lowering some finished steel prices, with lower priced imports from Mexico, Turkey, and Taiwan being the stated reasons. Stainless 304 scrap prices rose slightly after a few months of no change. With limited production changes and limited global growth, prices seem to be about stable. Copper rose slightly for the week, ending at $2.09 a pound, and in reality, when looking at this 5-year copper chart, we see it is close to about a 7-year low. With copper production strong around the world and copper consumption growing slowly, this 1-year copper inventory chart shows copper inventories are building, which will be part of keeping a lid on any major copper price increases in the months to come. Aluminum finished down yet again at 70.7 cents, a new multi-month low, which is due to increased global consumption, but production increases. Aluminum inventories tell an important story in that they are near 7+ year lows. So unless there are major global market shocks, aluminum prices should remain somewhat stable. Last week, one of the major Wall Street indexes, the NASDAQ, hit a new all-time high, yet it fell hard along with the Dow Jones Industrial Average on Friday. This highlights that while overall economic activity remains slightly positive, there are major global concerns about future economic trends. The good overall U.S. jobs data, combined with inflation beginning to rise a bit, has people thinking there could be a U.S. interest rate coming, but that remains unclear as the rest of the world continues to have policies to spur their economies. China's steel production, after hitting a new high in the history of the world a few months ago, came down a bit in July, yet it remains incredibly high. This will continue to keep downward pressure on steel prices and scrap ferrous prices for many months to come. The U.S. Institute of Supplier Management Index for non-production fell to 51.4, its lowest reading since February of 2010, as activity for new orders and employment slowed. This is still over 50, which means continued expansion, which is positive for the economy. On a big positive, the number of Americans filing for unemployment fell last week to the lowest level since mid-July, a very solid performance, which is a great economic indicator. Lastly, as a final reminder, this Thursday, September 15th, is BENLEE's second annual Safety Roll-Off and Operations Training Class. It will be held from noon to 4 p.m. at BENLEE. It's not too late to register. You can call Tiffany at 734-722-8100 to enroll yourself or your team. With that, we hope all have a safe and profitable week.